Yeah, what is going on, guys? Just wanted to jump on here to give my trade recap for today. I just want to apologize for um, not making a video yesterday. My family flew back from a holiday and was catching up with them. Spent some time catching up with them, and I showered quite late, as well as I ate dinner quite late. And as soon as I hit the bed, I completely knocked out. Yeah, and I think it's a bit I just mumbled there, but yeah, just want to apologize for not checking in with you guys for yesterday. As yeah, again, should still be making my videos, but again, I just want to give the unexplained kind of um just want to explain on this video why I wasn't able to post a video yesterday. I also want to do an apology for again, yeah, missing that video. You guys should hold me accountable. Um, and I'm also holding myself accountable as well. Just to let you guys know that, I apologize, and I'm continuing to make these videos. No matter what. So I will be making a trade recap on Friday, just to make up for Tuesday, which I didn't trade on. So that's something to keep note, that there'll be a video Friday as well. Um, Normally I do a video on Sunday to recap the Thursday I didn't trade. So yeah, there'll be a trade tomorrow and Friday as well. So yeah, just wanna give my apologies for missing that video yesterday, and yeah, let's get right into it. So one trade was a win and one trade was break even. Um, the first trade I took kind of um the first trade I took was a break even trade, and I kind of want to go over the missing confluence that I missed, right? Within that move, within the trade I took, there was obviously something missing, right? And the main thing missing was our equilibrium tool. So as you guys can see, um ideally for us to even look or think about taking a trade, our trade should be within equilibrium, right? We should be waiting for price to come within that equilibrium zone to fill in the high time frame, um, the high time frame like kind of bullishness. Oh no, sorry, that bearishness, as we broke these major lows here. We broke it within 10, our displacement. This is our break, and I should be waiting for equilibrium. So we're still waiting. So I talked about how we were using the we're using the 1 hour to reflect our 15 minute, but I'm also forgetting that on the 1 hour equilibrium should be used as well, because if our 15 minute reflects the 1 hour and the 4 hour, we still should be using equilibrium to mark out where our zones are and where we're more probable to get a change in direction. Um, which is what I realized in my second trade as I've used it, and the trade worked out perfectly. We bounced from that level and we end up working really, really nicely. So again, I just want to remind myself and remind you guys that even though we've kind of switched time frames, so we're looking at all time frames, right? We're looking at all time frames, and um we're looking at displacement, but we're also making sure that we're within that equilibrium period of when we are looking to take a trade. If we're not, that means we sit on our hands and we don't take a trade at all. That way, we still take less trades, but more on the side of yeah, um, but more high probability trades, as well as um, not sticking to that lower time frame, right? Because when we get a retracement into that high time frame POI, but it's not within equilibrium, we're still in that low probability state of it not being within equilibrium. So again, using that equilibrium tool effectively just to mark out our zones of where we want to take a trade on that higher time frame, is important. And I'm just gonna remind myself and remind you guys as well, because you guys are tapping in as well. So yeah, we have to use the equilibrium tool. Um, Again, that way it mitigates our chances of taking a trade from a high time frame POI, thinking it's gonna work because it's a high time frame, but it's actually a 5 minute or 15 minute. It's not actually the higher time frame, right? So what I mean by this is that this trade here, I took a trade. Um, I took a trade of what did I take a trade? I took a trade bouncing off this equilibrium here. But ideally, within this whole range here, we even get a retracement to equilibrium. So I see I see this fair value gap here, and I'm looking, and I'm like, ideally, this only reflects the 15-minute time frame. So it's one of those things where I should be waiting for price to actually make its way up here, right? Filling in equilibrium and then taking a short, right? Then looking to take a short, right? Because that way we're now playing with a higher time frame. Now we just need to align it with the high time frame, which in this case we would be because we're waiting for a liquidity sweep, a market structure shift, then a retracement, then a continuation down short, right? But this trade here, though we had our entry model, right? We had our entry model. Um, we had our entry model, right? We had a sweep of these highs as well as taking out these highs as well as these highs here. Um, we took out these highs, had an extra sweep for confirmation, had that break, right? But again, we end up putting in a new low, but I didn't really feel like I felt like the trader was gonna reverse on me just because of how much room he had to fill all the way up here. Um, but I love how we're like constantly, you know, um, working on our entry models. Or, like we've got the entry model down. We've kind of made our own entry model, which is good. But now we just need to align it with the high time frame and picking the right high time frame POIs, and that's why we need to implement equilibrium. So, yeah, this trade ended up being a break even. Um, Honestly, I should have just taken um, a a one. This should have just been a 1 hour trade, but ideally we want to be on that 1 to 2 range, and we're only gonna get that from that high time frame POIs, right? If we stick to the low time frame like this, where technically this would be a 15-minute POI, we can only end up with trades like a 1 to 5, or 1 to 1.5. So, it's very, very risky. But if I'm just waiting for price to make its way up here, it's easier for me to take a trade off and price actually going in the directed way after that market structure shift. So after we get that market structure shift, price is more likely to play out, or it's more probable that price actually plays out on that factor. So again, we just need to implement that equilibrium again when we're doing our hard time frame analysis to know kind of what's going on and where we should be looking to take a trade from. Right. So this trade was a break even. I should have taken profits down here, but I didn't realize that. But I did go break even after we broke these lows with some displacement. So as you guys can see, we filled in this hourly gap within this whole range here. Again, it looks fucking horrible, but again, this whole range here, we did not hit equilibrium, not once. So ideally, I should be waiting for price to come up here, to kind of do its thing, to get a kind of reversal pattern from this area here, right? Because we'll be in a premium to go short. So yeah, but we did take a trade off this 1 hour fair value gap there. Off that 1 hour fair value gap, we pretty much just waited for our entry model, right? We waited for a sweep, right? We had a sweep of these highs, as well as these highs. We have a extra sweep, no closure above these highs. We get a nice clean break, right, with some displacement. Waiting for a retracement into it, a nice bearish candle out of it, which is exactly what we had. And we enter stops above this high, because if this POI doesn't hold, just means that this high is not protected at all. And we're targeting that 1 to 2, but ideally target should have been at this 1 to 1.6. But again, I should be waiting for price to actually come and fill equilibrium, so we're able to be more consistent on the bigger R trades. So that way, if we do lose, right, we're losing small, but we're also winning big on our wins. So that's something to actually look out for as well. Because if we base it on probability, and if we have a winning strategy that's more than 2R, or 2R as a kind of baseline, we're bound to be profitable, just because we're making more than we're actually losing. So that way we kind of able to risk manage as well on our account, and we're able to scale it rather than taking these one to ones and then um, losing and then becoming break even. So we're not really scaling the account that way, because if we're 1 to 1, we could lose the next day, right? But if we get a 1 to 3, we have 1 or 2 days that we could lose, and we could still be break even, or even be up 1%. So it's kind of like one of those things where it's better to have a better trade. So when we talk about A plus trades, that's what I mean, is by waiting for those proper sit-ups, which we had a good setup here, but it wasn't, again, within equilibrium. We did not fill in this high time frame range at all. So it's something to actually not consider. Um, and again, if we don't fill in equilibrium, I just sit on my hands, right? There's nothing more I can do. That way we're staying consistent, and we're keeping our trade executions low as well. So that's something I need to remember as well. But I'll take you guys on to the second trade. Um, I'm starting to do these dates more recent price action. That way I'm kind of staying in tune with the price action for the day. I'm also looking at taking trades um, within within taking trades, or kind of forward testing within what's it called, with kind of forward testing on current price action. So um, that way that we're kind of doing both, right? We can wait to look at trade, we can wait for a trade, um, or I might even just continue to full test. But again, we still kind of want to be on that point of getting these trades as many as we can on different sessions. So yeah, I might have to back test each and every single day from the week, or maybe the week before. That way we're keeping price more accurate and more kind of current when it comes to our back testing as well. That's something I thought about as well. But so um this would have been May 11th. So this would have been uh last couple of weeks, or maybe the last 3 weeks. So 3 weeks ago. Um so this is what I mean by equilibrium, right? We see that price broke these highs, right? We see that price broke these highs. It's an external high. So what are we looking for? We can see that internally we actually broke these highs as well. So we'll draw our equilibrium tool from these lows to these highs. And what do we fill? We fill in equilibrium, right? We fill in equilibrium within that 4 hour gap, right? You can even say a breaker block here as well, or whatever you want to say. But again, it's within our equilibrium period, right? And look at the move it just produces, right? So as you guys can see, the 1 hour is bearish. Um, the 1 hour is bearish, and all the way. Um, we flipped all the way bullish from that 1 hour. This 1 hour wasn't within equilibrium, but this trade was taken off the reaction off this 4 hour equilibrium. So this higher time frame is within equilibrium already. So we don't need the 1 hour to be within equilibrium again to take a trade, as we already have the reaction from the 4 hour equilibrium. We don't need the 1 hour to be within equilibrium for us to take this trade. But again, we still did use a high time frame POI, which in this case was this 1 hour fair value gap after the reaction off this 4 hour gap here. As you guys can see, we get a nice clean break. So ideally, our equilibrium on this 1 hour, let's say if I got on the charts now and I missed this trade, I would wait for price to actually come back into this equilibrium zone, maybe take out these lows again before continuing higher. So that would be me. Or even if we break structure again, which we are now, um, I'll just look for equilibrium again within this low to this high, right? To fill in equilibrium. Right, that's what we're looking for. Um, but anyways, yeah, again, since price was already in a high time frame equilibrium, we didn't really need to um think about equilibrium within that 1 hour time frame because our 4 hour time frame was already within equilibrium and we already had the reaction. So I pretty much went into the 5 minute after we tapped into the hourly fair value gap. Waited for a sweep, some form of lows. Waited for a break of structure. um, so we had a sweep of these lows, no closure. We had a closure above, right? This was a clean PY to take a trade from. Waiting for some reactions out of it. Um, actually, we had a clean move, or we had a clean displacement move. I entered on this candle here. As now defense layer would be this 5 minute fair value gap. So that was our defense layer, and took a trade, entered, stops below this low because this is where we took the trade from. If price breaks below this, just means that our POI or this trade is invalid. Um, we break structure, we absolutely rip to the upside, taking out the external high, and this is a 1 to 2.43 hour trade. So this is the easy trade that I'm talking about. We're not fighting that constant lower time frame struggles that we have when we are in a lower time frame POI like the 15 minute or the 5. Um, so this is what I mean by like, the trade being easy. It's easy to take. This is easy price action, and this is only at 10:30 as well. So we're still within London. So this happened in London. So what does that say? You know what I mean? So um yeah, that kind of wraps it up for today's trade. Again, equilibrium needs to be on that high time frame. The 1 hour or the 4 hour needs to be within equilibrium for us to take a trade. That's the reminder for today. We used to do that on the 15-minute external breaks, but I'm forgetting that I need to implement that on the high time frame too. Just because we tapped a hourly POI doesn't mean that um, doesn't mean that it's we're still in a higher probability. Just because it's a 1 hour POI just doesn't mean that. It doesn't mean that um, it's high probability because again we're not within that. Well, in this case, we're not in within that discount to buy. Um, it's not a bigger probability, and that high time frame is most likely not going to hold just because of the big range that we have. But now we filled in equilibrium, right? We filled in equilibrium on that 4 hour time frame, filled in that 4 hour fair value gap, had a nice reaction, waited for price to come back and fill a high time frame POI. So even though we had a nice reaction off that 1 hour, we had no though we had a break, we had no retracement, which is fine. We just wait again for a high time frame POI, which in this case is our 1 hour. Doesn't need to be within equilibrium because again, our 4 hour was within equilibrium, and we execute the trade. So that's something I need to remind myself to implement from now on. Is that making sure if I'm substituting the 15-minute external to the 1 hour and the 4 hour, I need to make sure that equilibrium is being implemented in one of those places, either the 4 hour or the 1 hour. So yeah, that's something that I will kind of do from now on, and that's why we backtest, right? We backtest to learn, we backtest to figure things out on what's going wrong and what's going right, and Why are we following our entry model, but it's not playing out? But we know the entry model works, right? Where does it work at? What PYs does it work at? How does it work, right? And this is what backtesting is for. Yeah, again, if I do end up taking a trade, um, won't be tonight, but if I do end up taking a trade, on on current price action, paper trading, then I will let you guys know in the video and kind of explain the process of what my thinking is within the real time. So we're seeing candles print every single minute, every 5 minute. So we're kind of on the go there. Um, but yeah, I mean that kind of wraps it up for today. I just want to say God bless you guys. I hope you guys have an amazing night or day wherever you guys are from. Um, and I'll see you guys in the video tomorrow. Peace.